Hello, and thanks for joining us today. I'm super excited you could be here because today we're talking about something we've never talked about before, which is taking government incentives and turning them into win-win investments. This is a cool topic you're going to want to know a lot more about. And with us to have this discussion is Tom Wheelwright. Now, Tom is a renowned CPA and tax and wealth expert who has dedicated his career to helping individuals and businesses achieve financial independence. Now, as the founder of Wealth Ability, TFW Advisors, PLA Software, and the Wheelwright Manahan Family Office, Tom has built a network of businesses focused on providing education, tax preparation, and tools that empower people to break free from financial reliance on employers, Wall Street, and the government. Now, he also is the trusted CPA for Robert Kiyosaki, the author of Rich Dad, Poor Dad, and an international speaker who has shared his insights with over 100,000 entrepreneurs and investors across 6 different continents. Now, Tom is the best-selling author of Tax-Free Wealth and The Win-Win Wealth Strategy, books that have transformed the way that people think about taxes and wealth building. His approach centers on using tax code strategically to create and preserve wealth, making the complex world of taxes both understandable and also advantageous. Now, in addition to his writing, Tom hosts the Wealth Ability Show, a popular podcast where he shares his expert insights on tax and wealth strategies, solidifying his relationship as a leading voice in the financial world. Tom, really accomplished guy, man. Thanks for joining us today.
Thanks for having me. It's easy to be accomplished when you're as old as I am.
Yeah, I'm not too far behind you, I don't think so. I'm just trying to catch up on the accolades that you've done. So congratulations on your success. You've done a lot to help with the education, with this financial education that you've been providing.
Well, I've been very fortunate. I grew up in a family of educators. Actually, I have a brother who was a Harvard Business School professor. I have my whole family has been very involved in education, and I was very fortunate. Almost 25 years ago, when I met Robert Kiyosaki and we became friends, and I've been traveling with him, and he's really to me the king of financial education, and it's always a privilege to be teaching alongside him.
Now, out of curiosity, how did you and Robert meet?
I bought a CPA firm. I was building my practice. I bought a CPA firm, and he was the client.
Oh, wow. Interesting. And he's still a client to this day.
Still a client to this day. Yeah.
Well, that's cool. He's a really interesting guy, Robert.
He is. I love him, and his message. He's an amazing person. We travel the world, and he always takes time for people. People will come up to him. I've seen people come up to him in Kazakhstan, Kyrgyzstan, Romania. We're just going through Belarus, and we're actually going through passport control in Belarus, and the passport control officer asked if he was the Robert Kiyosaki and could he please give him a signature. So that's the impact that Robert's had around the world. It's pretty amazing.
That's pretty amazing. What about you? The Win-Win Wealth Strategy, your book. So what motivated you to originally write this?
Yeah. So my first book was Tax-Free Wealth, and Tax-Free Wealth is really an explanation of how the tax law actually works. So it's really meant to be a very simple, for the average person. Okay, what's available in the tax law for me to use to reduce my taxes that is legal, ethical, and moral to use, not the tricks and tips, but how it actually works. Right. And in that one, I explain that the tax law is fundamentally a series of incentives, and it's primarily for business owners and investors. And then I walk through the different incentives, basically for business owners and investors. In the Win-Win Wealth Strategy, I wanted to look at the actual investment side. So what I wanted to analyze is, what does the government get out of it? Why do they give investments? Do they actually make money on this? Does it actually work for them? Or is it just, like the pundits would say, oh, this is just the lobbyists getting a giveaway, right? So I wanted to actually analyze, is it really a giveaway? Is it actually make economic sense for the government? And then, what investments are there that the government, in my mind, I think there are 7 investments that I talk about in the book, that the government will literally pay you to make these investments. So they will contribute part of the cost of the investment. And they do that through tax benefits for other taxes that you've paid. So for example, this isn't about how do I not pay tax on the income I earn. This is about how do I reduce the taxes on the income I earn by investing, which is not something people ever think about. Because it came up years ago when I started doing tax strategy work with entrepreneurs. And the first question I always asked was, how do you make your money? And they could all answer that, and we'd go through, and that's really what tax-free wealth is all about. But then the second question I asked was, okay, so what are you going to do with your money? And most of them said, I have no idea. I like turn it over to a financial planner. It's in the bank, unless they were putting it back in their business, they didn't really have a, key is what to do with that money. And so what I've been studying over the years is, all right, what if you do the things the government wants you to do? So in other words, instead of being a silent partner, like most people are, we're all partners with the government, right? So instead of being a silent partner with the government, what if you actually look at those things the government would like you to invest in and invest in those things? And then what's the tax benefit for doing that? So if there's a tax benefit, can I offset the income I earn in my business with, because I make an investment in real estate, as an example? And the answer in that case is absolutely. So what are those other investments that I can make that I'm going to take my money out of my business? I'm going to put it into some other investment because I can't put it all back in my business. What are the incentives there? What types of investments are they? And that's what the 7 investments are.
So when we talk about these 7 investments, give me some examples of like a few of the ones that you think are the ones the government prefers the most and that are the best win-win situation for us.
I will actually tell you what the government prefers the most is agriculture. That is not the one people would think, but it's agriculture. I've had clients that were farmers and ranchers. They never pay tax. They just never pay tax. And they're just, the incentives are so high for investing in agriculture. And that makes sense, right? I mean, the government wants food production. They want to encourage that. They know that it's a high risk enterprise. And so the tax benefits in agriculture by far, I mean, nothing else comes close to it. Probably the second closest would be energy. And of course, a lot of people are familiar with solar energy credits and things like that. But there are some pretty amazing energy incentives, both in the fossil fuel area and renewable energy. So, those are probably my top 2. Now, it all starts with, you have to be investing in the actual asset. You can't be investing in stock. If you invest in the stock, okay, the only way to do that tax effectively is to put it into a 401k or a pension plan, something like that. And then you can, and I do. And that is, by the way, investment number 7 is a pension plan or what we'd call a qualified plan for retirement, like a 401k. But it's, interestingly enough, the government wins on 6 of the 7 investments. And the one they don't win on is retirement plans. They break even. They just break even on retirement plans. But if you can consider, you're a business owner, you're an entrepreneur. What if you could be an investor in everybody's business? That's basically what the government is. They're an investor in everybody's business, and they'll take that risk because they believe that there is a reward at the end. And if you run the numbers, which I do, of course, I'm an accountant, they do win. And actually they win pretty big in the end. And I wanted to see what the numbers were because, we keep hearing this, tax the rich, tax the rich, tax the rich. And I'm going, okay, now what's the consequence of doing that? Well, it may be, it depends on who the rich are that you're taxing. So if you're taxing the rich that put their money in the stock market, you probably don't have a big issue. But if you tax the rich who put their money into energy, agriculture, et cetera, you've actually got a problem, because you're actually going to reduce long term, you're going to reduce the revenue to the government. And short term, you're going to reduce the investment into those things the government wants you to invest in. So it's an interesting, to me, it's interesting from a policy standpoint, but from a practical standpoint, it's just, tell me where the government wants me to put my money, and I'll look at to see if there's one of those that I want to do.
So I've realized over the last few years, I used to think I had to build a business to make the money I want to be able to live on the rest of my life, exit at that amount. Then I've really come to realize that the wealthy don't operate that way. The wealthy sell a business and then take the money, and then that's where they
Right.
make all their money, is from all the investments, right? If you look at like Elon Musk and PayPal, he made a good money, right? But then look at how he multiplied it with all the investments in areas it sounds like you're even touching upon as well. So it makes me wonder.
Elon Musk is brilliant at this. I mean, so one of the things is research and development. Well, why didn't Elon Musk or Tesla pay tax for 20 years? Or why didn't Jeff Bezos pay tax for 20 years? Well, it's all because of the tax incentives in technology, right? And then Elon Musk, on top of that, has taken advantage of the tax incentives in energy, right? In building electric cars. And so Elon Musk is actually used the tax law brilliantly.
It sounds like the wealthy are. It sounds like maybe is that
Uh-huh.
what you're finding? Is that's why the wealthy are wealthy, is
Oh,
because they're better at this than the rest?
no question. They they're wealthier. The wealthy, by the way, do pay a lot of tax. In fact, they pay most of the tax in this country. So that's just a misunderstanding. But they do understand it. They understand that. And I'm not saying they don't have lobbyists. I mean, we actually have a tax provision in the law that allows real estate professionals to take full deductions for all of their expenses. Who was one of the people behind that lobby? Donald Trump. Donald Trump was he actually was part of the lobbying effort to get that provision into the law. So it's a good provision. Honestly, it's a good provision. But yeah, I think the wealthy, first of all, the wealthy have really good advisors, right? I mean, they're hiring the big four accounting firms, Deloitte, Ernst and Young, et cetera. So they've got those top end advisors, and they've got top end financial advisors. But they also think differently. They think differently because they recognize that, if taxes are for them 40% to 40 to 50% of their income, right? So if they can eliminate that 40 to 50%, if you look at the numbers, when you eliminate taxes, you don't just double your return, you actually quadruple it, because you've multiplied how much you have to invest so much, and you multiply every year so much that the compounding effect is basically 4 times what you would do if you just invested your own money and paid tax on it.
Wow. So in the win-win wealth strategy, you talk about all the 70 investments, and you also mentioned that you want to directly invest, not directly in the market. The market's number 7. So let's say that I want to do agriculture. I'm from Indiana, so I can relate to this, and everything you're saying makes sense to me now, because like all the farmers are driving around in like
Yeah, of course.
$100,000 trucks. Like these guys, like, what's going on? Like we had a bad season this year. So it all comes full circle. Now I understand. But how do you invest in some of those things? Like I don't not even know, coming from Indiana, I don't even know how to directly invest into agriculture unless I'm opening a farm, which obviously I don't have an interest in doing. So how can you invest directly into some of those things if you're not doing it through the market?
Well, so I look at investing just like I do retail. So I like to shop. So I like to shop for clothes. I like to shop for cars. I'm a shopper, and I look at shopping and investing. They have parallels. So I can go and shop retail, and I can pay retail price, or I could go shop wholesale. Now, if I could, I can go to a wholesale outlet, and then I can pay pretty much half the price I would pay at retail. But if I go to the factory directly, I'm paying like a lot less. I'm paying half of what I would pay wholesale. Those are typically the numbers. I grew up in wholesale retail. So my dad was a printer and a publisher. And so I knew that we doubled, we sold for wholesale half of half the price we sold for retail. Well, the same is true with investing, right? You can invest retail. Well, that's called the stock market. That is retail investing. Or in real estate, it'd be a real estate investment trust, right? That's what retail investing is. But the other two levels of investing are available. The wholesale level is actually only available to certain people. It's interesting. It's restricted to the wealthy. And that is a very interesting part of our economy, because you must be an accredited investor to invest wholesale, meaning you're investing in private equity, meaning it's a syndication or a private offering. They don't allow investors that aren't accredited investors. An accredited investor, you have to be making over $200,000 a year. You have to have $1 million of net worth outside your home. So 300,000 if you're married. So you're not, basically what the government's saying is, and this is a government rule. This isn't this isn't the syndicator's rule. This is the government's rule. They said, look, if you can't afford to lose the money, you're not allowed to invest in this deal. And that's basically what they're saying. They're saying, if you can't afford to lose the money, you're not allowed to invest in the deal. And so that is restricted to those people who are accredited investors. But that's how you would do. That's one way you could do it. If you, let's say agriculture, let's say that you got into an investment in a ranch or a farm, that they're out raising capital either to expand or to acquire additional land or whatever, and they're raising capital, and they typically do that through a private offering. But you would have to, in that case, you would have to be an accredited investor. At the factory level, that's basically saying, I'm going to develop myself. So that's the farmers and the ranchers. So they are obviously fully invested in their farm or their ranch. And so in fact, I just finished recording my podcast, and the guest I had on is somebody who had sold his business and gotten into ranching, just started a new business, but it's a ranching business. Well, part of the reasons he looked at it, because he and I had multiple phone conversations before he bought the ranch, was the tax benefits of acquiring the ranch, and how does he offset some of this income from selling his business. And the way he did it was by buying the ranch.
And that's a really, really strong point, because a lot of people here, that's their goal, right? Is to ultimately build their business, because everybody here's business owners, and then ultimately look to exit the business. And then it's interesting, because I'm thinking about that now. Like, what happens when I do exit? Where do I put this money? Like, it's so overwhelming for me to even be able to think about, like, to be able to figure that out. And so what you're saying is it makes a lot of sense to be focusing on these 7 different investment strategies that help us then kind of lower the taxes that we're going to pay on the overall business, because that could be pretty substantial, just the money that's taken right away if we sell the business.
It's huge. And there's really 3 times you're thinking about lowering your taxes on selling your business. One is early on, because there are a lot of things you can do to structure your business early on to reduce your taxes when you sell. But and those things you can't do later on. The next time is when you're thinking about selling, but you don't actually have a buyer yet, or you maybe have a letter of intent, something like that. That's when you bring your tax advisor and say, okay, what do we need to do to make sure that I get the lowest tax possible based on how I do this transaction? So I think every business owner, I think they make a big mistake when they only involve their attorney and don't involve their tax advisor, because taxes are a big part of because you don't care what you sell it for, you care what you get. That's what matters. It's not the sales price that matters to you. It's what you put in your pocket that matters to you. The third time is after you sell. So there are some things that, you're going to structure that business. So, okay, maybe I can reduce it or get capital gain versus ordinary income. Okay, but then is there something I can do even after it? And that's where, what do I do with my money next, makes a big impact. But again, that's one where you don't want to do that last minute. You want to be prepared for that. You want to be thinking about that as long before you exit as you can, because it's not easy. You sell your business for $20 million. It's pretty easy to place $1 million. it's it's a lot it's a lot different animal when you're placing $20 million, okay, or $10 million or whatever the sales price is of your business. And then you're looking at, okay, I want to make sure that I do something that I care about, that's interesting me. So this rancher, now rancher, he loves the outdoors. He's lived in Wyoming and he loves Wyoming. And so he bought a ranch in Wyoming. And so that made sense. So that's a way for him to retire, sort of, but not really retire. Because I think the other thing business owners we have to remember is we're not good at retiring. I mean, entrepreneurs, it's in our blood. When I golf, I never meet entrepreneurs on the golf course ever. They're employees, they're attorneys, they might be in real estate, but you don't meet an entrepreneur typically on the golf course because entrepreneurs don't golf. They want to do something that's more active, that's more involved. Now, I meet a lot of entrepreneurs when I do triathlons. That's when I meet that's when I'm going to meet the entrepreneurs because they want to be super active. So one of the questions is, what do I want to do next? Because probably you don't want to sit around, watching TV or playing golf.
So if we're figuring this out, what's the next thing we want to do? Because a lot of us are big on manifestation, right? We need to visualize where we're going,
Right.
and we believe in that power of that. But then it gets confusing, like it almost gets overwhelming, and that's where I am. I start thinking about, oh my gosh, what would I invest in? What would that look like? And it's like it becomes convoluted. We kind of lose sight there because we don't know what to do. So what are some of these things we should be focusing on if we're just starting our business now, or we're already in the business and we're thinking about exit? Wherever it be down the road, what are some of the things we should be doing now to get ahead of this to make sure we pay as least taxes? And how can we, besides getting your book, which we should all be doing, figure out what we should be thinking about in the future to figure out what we want to do, but it's a good fit with these 7 investment strategies so we can minimize the impact of the taxes?
That's exactly why I wrote the book, to get that question. Thank you. Let me unpack it a little bit. So you started by saying, let's start by what can you do right now? Well, obviously you want to meet with your tax advisor a tax advisor who actually understands a long-term strategy, plan of action, okay, and can actually produce that long-term plan of action. That's got to be a tax advisor who really understands the tax law, that's not just preparing your tax returns, but actually is somebody that you're very comfortable that, hey, they know what they're talking about. Okay. So that's something every business owner has to do as soon as possible. I mean, you're giving up money every single day. I guarantee you 90+% of business owners are leaving money on the table, on the tax table, every single day. So every day you delay, you're just giving money to the government that didn't need to be there. My belief is, and actually so is the government's belief, that you can do better with your money than the government can. They don't want your tax money. They'd rather you be an active partner with them. They'll take your tax money, don't get me wrong, but they actually make more money. They do better because if you do successful, let's say you invest your money in a business and you're successful with that business, you're going to pay tax on that business. So they're going to make money, right? This is just it's a collaboration. It's a partnership. But then you said, we like to manifest. And I love that, because the very first thing we do with a client is we actually have them visualize that and write it down. What do they want? What are they wanting to, to use your term, what are they wanting to manifest? But then the important thing there is then you have to actually put numbers to it. And this is where your accountant comes in, because we're good at numbers. So we'll have you do that, describe it all, write all, imagine it, all that kind of stuff. Do a vision board if you want, but then we got to put numbers to it, because if we put numbers to that, we also need to put numbers to where we are now. And if we can do those two things and we can actually put a timeline to it, that's easy. Then now all of a sudden we have a return on investment that we need to get in order to get to that target. And that return on investment actually will determine, are we going to invest at the retail level, the wholesale level, or at the factory, actually do the development ourselves? Because the higher the return that you need in order to accomplish your goal, okay, the more you have to get the closer you have to get to doing it, actually doing the raw investing, like the rancher, like the farmer. If you only need 5-6%, you can do that retail. So you don't need to spend all the time. The next thing though, because you use this term too, and I love it, and we use this term, is you need to focus. I don't know any business owners that built their business by being scattered. Okay. Or as the financial planners would call it, diversified. No business owner diversifies their business. They don't do it. They build their business based on a focus or a niche. And so that's the next thing we actually take our clients through is, okay, what asset class? I mean, are you going to invest in, do you want to invest in other business? Do you want to invest in real estate? Do you want to invest in commodities? Do you want to invest in the stock market? Where do you, what's the asset class? And we actually drill down. And then of course you have to drill down further and you have to come up with what are my criteria for investing. And then I have to build my team, right? But it really is a process. And what we've done is we actually put it into software where we can actually walk a client through, and after 2 months, they know exactly how they're going to invest. And it's really clear to them, because it's really tough. If we're really good at knowing what we want to do in our business, but we're really bad as entrepreneurs as knowing what we want to do with our money after our business or when it's outside our business. And that's our job, is to kind of help people go through that. But it's really, we start with the two things you mentioned: manifest it, we call it the dream. And then second of all, focus.
What are some of the mistakes that you see entrepreneurs make along this, where they just end up paying too many taxes or exit the business and it doesn't go well for them financially because they're not doing the right things?
First of all, they underhire. So they underhire their tax advisor. They say, well, I want somebody, I don't want to spend a lot of money on this. It depends on how you look at your tax advisor. Is your tax advisor an expense or an asset? And if you look at them as an expense, that would be a tax preparer, right? They are an expense. You want to pay the least amount possible. But if they're an asset, they're actually helping you reduce your taxes, which actually produces cash flow for you. You actually want a better, you want a better asset. You want an asset that puts more money in your pocket, and you're willing to pay for that because it's producing a return. So I think that's the first thing that people do wrong. The second thing is they think that they don't have to do anything themselves. I like to say, as I say in Tax-Free Wealth, if you want to change your tax, you have to change your facts. So I can't change your facts. I can tell you what facts you need to change after I've spent some time with you, but I cannot actually do that. So if you want to deduct your travel, I'm not the one who's actually going to go work 4.5 hours a day on your vacation. And I'm not the one who's going to document it. You're going to have to do that. I can tell you what you have to do, and then you can choose whether you want to do it, but it's a partnership, right? So it's, the name of the book probably should have been Win-Win-Win Wealth Strategy, because you do have to have team members. And I think under hiring your team or doing yourself, that's a huge mistake that people make. But the other thing is that is not understanding that you do have to have a basic grasp of it. And this is why I wrote these books. Is before Tax-Free Wealth, there'd never been a book written that was easy to understand about how the tax law actually works. And from this perspective, that it is a series of incentives. And so I wanted people to just get a feel for, okay, it's not scary. It's not that hard. The details are hard. The details are scary. That's what your tax advisor and your tax preparer are for. But the concepts are very simple. It's just like the very first, when we were talking about the agriculture, you go, well, yeah, of course, that makes sense. That's why they're driving $100,000 cars. And I don't understand. They say they're not making any money. Well, tax-wise, they're not making any money, but they're actually getting cash flow. So cash flow and taxable income, two different things. So, that's actually one of the keys is you want cash flow. You don't want taxable income, two different things.
Tom, powerful stuff today. Everybody that's listening and watching that's trying to figure this out for themselves and would like a next step, what would you suggest they do? Where can they go to be able to find out more, get your books, and get in contact with you?
Well, certainly, I mean, the books are everywhere. We have 4,000 5-star reviews on Amazon. So for tax-free wealth, so pretty easy to find my books. They're in bookstores everywhere. But if you're looking for, the kind of the easy button for a tax advisor, we actually have a franchise of tax advisory CPA firms around the country, and you can go to tfwadvisors.us and find a tax advisor. In fact, you can actually choose which tax advisor you want right there on the website if you want to do that.
And you said that was
TFW as in tax-free wealth, tfwadvisors.com. .us, sorry.
.us. Okay, perfect. All right, Tom, thank you again so much for coming on with us today.
Thanks for having me.
All right, so a couple things. Listen, as I always say, that knowledge doesn't mean anything if you don't take action, right? And the reality is, let's be honest, we all suck at this. We all suck at everything he just said. We all are horrible at this. We're horrible at really managing our wealth and our money while we run the business, let alone having any clue of what we're supposed to do when we exit the business. And now is probably too late even. You need to start taking action right now because you probably should have, as Tom said, when you started the business. So there's a couple steps I want you to take. First of all, you need to talk to a professional. The reality is that there's no way you're going to figure this out on your own. Even if you listen to every podcast I've ever done, every expert I've ever talked to, you're still not going to figure out this on your own. So you need to go to tfwadvisors.us. That's tfwadvisors.us and talk to somebody and be able to develop a strategy, as Tom said, to get a clear path of where you're going. And this will help you visualize where you want to go, what it's going to look like after you exit, what you're going to be able to do with that money. That's going to be what's going to get you excited about life after your business. So make sure you check it out at tfwadvisors.us. The next thing you want to do is you want to go to Tom's website, and Tom's website is his name. It is tomwheelwright.com. That's Tom Wheelwright, WHEELWRIGHT.com. Tom has a ton of resources. He does events. He's got a podcast. You can get his books there. There's so much knowledge and information there that I think will help give you a lot of a guidance. Look, a lot of people don't want to talk to somebody right away. That's okay. There's a tremendous amount of resources, including Tom's podcast, that you can get access to right there on his website as well. And that'll help you get everything you need. And grab both of these books that we've talked about, because this is going to give you an idea of how the tax code works and how you can actually take advantage of it to be able to invest wisely. So make sure you check out those two resources, tfwadvisors.us and tomwheelwright.com. Thank you very much for tuning in. Take care. Have a great day.